Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Picture this. A single company. Started in a garage, right? Grows to totally redefine how billions shop. And now, it aims to power the actual fabric of the internet. On Earth, and maybe even from space.
It sounds like science fiction, but it's not. It's Amazon. Right now.
Exactly. It's their current reality, their future path. A true global titan.
No question.
So today, we're really unlocking what makes Amazon tick. We'll look at the leadership, that intricate business model, their competitive advantages, which are just huge, and their financial health.
And crucially, what it all means for you, the individual investor, looking ahead. Not just next quarter, but the next decade.
Okay, let's start at the top. Leadership. Any empire needs strong direction, and Amazon's vision. It's steered by this unique blend of seasoned executives.
Each one critical for their diverse strategy. It's not just one person pulling all the strings.
Leading the charge now is Andy Jassy, president and CEO. His history at Amazon is, well, it's deeply tied to their biggest success story.
He joined way back, 1997. And crucially, he was the architect of Amazon Web Services, AWS.
Right. He spearheaded its creation from, 2006? All the way until he took the CEO spot in July 2021.
And Jassy's origin story isn't just trivia. It's fundamental to understanding Amazon's DNA. He didn't just, manage AWS.
Yeah.
He literally transformed it.
Yeah.
From an internal experiment into the undisputed global cloud leader.
And that wasn't just a successful side project.
Not at all. It became Amazon's main profit engine, generating immense cash flow that basically funded, almost everything else they've done since.
He built the infrastructure for the modern internet, then got handed the keys to the whole kingdom.
Pretty much. And his focus now as CEO tells us a lot about where they're going.
That planned $75 billion investment in AI for 2025. That's just a massive number.
$75 billion. It's not just throwing money around. It's a deep commitment to Amazon's core principles.
Which are?
Relentless customer obsession and this unwavering focus on long-term thinking. Values he clearly inherited and reinforced.
So it's not just chasing trends.
No. It signals they intend to lead the AI revolution. Across retail, AWS, everywhere, it shows that willingness to make these huge, calculated bets on the future, not just on boosting next quarter's earnings.
That kind of strategic patience, the scale of investment, it's incredibly hard for others to match.
Extremely difficult.
Now, working alongside Jassy on the financial side is Brian Thiel-Sofsky, Senior VP and CFO.
He's been there a long time, too, since 2002. CFO since 2015.
So he's overseen periods of just unbelievable growth.
Absolutely. And his role is way more than just crunching numbers. His management of capital expenditures, CapEx, it's a masterclass in operational efficiency at scale.
Like building out that fulfillment network.
Exactly. Billions poured into warehouses, sortation centers, delivery hubs. Olsowski ensures those massive investments translate directly into better logistics, faster delivery, and ultimately improved profits.
He's keeping the financial ship steady while it's moving at warp speed.
That's a good way to put it. A very delicate balancing act for a company this huge.
Okay, zooming in on AWS specifically, Matt Garman is the new CEO there, just took over this year, 2024.
Right. He's also an Amazon veteran, though. Since 2006, deep experience in AWS's core compute services.
And why is his background so important now?
Garman's technical depth is key for AWS's future. He understands the infrastructure inside out. His focus now is on AI-driven cloud solutions.
Keeping AWS ahead as AI workloads get more complex.
Precisely. Anticipating needs, developing new services, maybe custom chips, ensuring their infrastructure stays cutting edge. He needs to keep those big enterprise AI customers happy.
Makes sense. Now, shifting to the massive retail side, Douglas J. Harrington, CEO of worldwide Amazon stores since 2022.
Under him, we've seen things like same-day delivery become much more common.
So his focus is really on that core customer experience in e-commerce.
Yes, making it indispensable. Same-day delivery isn't easy. It's complex logistics, warehouse automation, delivery networks, smart algorithms.
He's constantly optimizing.
Constantly. Balancing speed and convenience against the huge costs involved. Trying to get more efficient, serve more customers faster, more profitably. That operational excellence in retail is a huge differentiator.
And navigating the legal maze. That falls to David A. Zapolsky, Global Public Policy and General Counsel.
Been there since 1999, he's seen it all.
And his role must be absolutely crucial now with all the regulatory attention.
Critical. He's not just handling lawsuits. He's navigating these incredibly complex, often hostile regulatory environments globally. Antitrust in the US and Europe, data privacy like GDPR, labor laws everywhere.
His team has to anticipate and adapt constantly.
They do. Without that strategic legal guidance, Amazon's expansion would be way riskier, maybe even impossible in some areas.
Okay, we absolutely have to talk about Jeff Bezos, the founder. Even though he stepped down as CEO in 2021, he's still executive chairman.
Right. He's not in the day-to-day weeds anymore, but his influence on high-level strategy, especially long-term innovation, still significant.
Like his involvement in AI, the Anthropic investment.
That's a perfect example. It shows he's still shaping the frontiers of Amazon's future, especially on those big, potentially world-changing bets he loves. It's not just a passive board seat.
And it really keeps that founder-led culture alive, doesn't it? Even without him as CEO.
Absolutely. That ethos is central. It encourages audacious long-term thinking, relentless experimentation, even accepting failure as part of innovating.
Very different from some mature public companies.
Very. Bezos' shadow, in a good way, ensures they keep thinking big, prioritizing future value over just immediate returns. That's a powerful edge.
Let's talk about how they incentivize this leadership. Their compensation is different. No short-term cash bonuses, right? Heavy reliance on restricted stock units, RSUs.
Yes, and for you, the individual investor, understand this is key. It directly aligns executive interests with yours. By using mostly RSUs, they ensure leaders are deeply invested in long-term stock performance.
Like Andy Jassy's 2024 compensation, $40 million.
40.1 million, yes. But the vast majority wasn't salary. It was vested stock, directly tied to that incredible 9,800% stock rise over 2 decades. His wealth is tied to the company's success.
So their base salaries are actually quite low, relatively speaking.
Pretty nominal. Jesse's was around $365,000 for 2024. The real money comes from stock awards vesting over time.
And for others like Garmin or Harrington.
Same story. Base salaries in the low 6 figures, but total comp pushed into the 33, 34 million range, almost all from stock.
And what keeps them focused on the long term with those stock awards?
The vesting schedules. These shares don't become theirs immediately. They typically vest over several years, sometimes up to 6 years.
So they have to stick around and deliver sustained growth.
Exactly. It incentivizes decisions that build value years down the line, not just quick wins for a quarterly bonus. It forces them to build for durability.
How does this stack up against, say, Microsoft or Walmart?
The principle of equity alignment is similar, but Amazon's nominal salaries are noticeably lower, and their emphasis on RSUs over cash bonuses is more pronounced.
So it really doubles down on that long-term equity focus.
It does. Generally aligns interests well, though investors should always keep an eye on potential dilution from high stock-based compensation if it's not managed carefully.
Beyond pay, Amazon's guiding principles, their mission, vision, culture seem deeply embedded. Their mission is incredibly ambitious.
To be Earth's most customer-centric company, Earth's best employer, and Earth's safest place to work. It's a mouthful, but it drives them.
And the vision, to build a place where people can come to find and discover anything they might want to buy online.
These aren't just posters on the wall. They genuinely shape daily operations, product development, innovation across all 1.5 million employees. Customer obsession filters everything.
How do they make sure that actually happens, from the top floor to the warehouse floor?
That's where the 14 leadership principles come in. They're the cultural bedrock.
Things like customer obsession, invent and simplify, think big.
Deliver results, have backbone, disagree, and commit. They're more than just slogans. They're baked into hiring, reviews, daily decisions. It's a common language, a framework for solving problems.
So you combine Jassy's AI focus with Bezos's regret minimization idea.
Right, that philosophy of taking bold risks to avoid missing opportunities.
And you get this expansive, tech-driven vision for global leadership.
Exactly. It permeates the whole organization, driving this unique culture of rapid experimentation and relentless execution. It's quite powerful.
Okay, let's unpack the business model. On the surface, it looks simple. An online store, buy anything.
Right. That core is straightforward. A huge online marketplace, massive selection, fast delivery, making shopping easy. That's the foundation.
But you peel back that layer, and the complexity is just stunning. It's way beyond e-commerce now.
Oh, far beyond. It's e-commerce, yes, but also global cloud computing with AWS, digital streaming, AI, logistics, advertising, healthcare, even space ventures.
It's like a whole digital economy in itself.
Exactly. And the key is how these pieces interlock. They create powerful synergies. AWS infrastructure powers the e-commerce site during peak times like Prime Day.
And the retail data feeds back into AI development.
Constantly improving recommendations, optimizing logistics, making Alexa smarter. It's a feedback loop across all segments. This interconnectedness is incredibly hard for anyone else to copy.
Let's break down that product portfolio. What are the key pillars today?
Foundational, obviously, is e-commerce, the online retail platform. Its dominance comes from convenience, selection, price, pure product market fit.
Then Amazon Prime, the subscription service.
Over 200 million subscribers globally. Bundles free shipping, streaming, deals. Creates huge customer loyalty, makes people spend more within the Amazon ecosystem. It's core to their strategy.
And the profit engine? AWS, Amazon Web Services?
Absolutely crucial. Cloud computing infrastructure, platforms, software for businesses, governments. Clear market leader, 31% share. It democratizes computing power, fueling innovation everywhere.
They also have significant digital content. Prime Video, music, Kindle.
Growing fast.
Yeah.
Very competitive space, especially streaming. But it adds huge value to Prime and expands their reach into entertainment.
And their devices, Kindle, Fire, Echo, are everywhere.
Especially Echo with Alexa. Deeply embedded in millions of homes. They're gateways into the ecosystem, driving commerce, content, data collection, reinforces loyalty.
Then there's the massive logistics operation, fulfillment and delivery.
Globally scaled, complex network. Supports fulfillment by Amazon, FBA, letting third-party sellers use their infrastructure. It's a massive competitive advantage.
And advertising is becoming a giant in its own right.
Huge, high margin. Generated nearly $14 billion in Q1 2025 alone, up 19% year over year. Shows how valuable their audience and data are to advertisers.
They're also in grocery with Amazon Fresh and Whole Foods.
Expanding, but it's a tough, complex market. Adapting e-commerce agility to fresh food is challenging.
And the newer but potentially huge area, healthcare.
Amazon Pharmacy, One Medical. Still emerging, early days. But the potential to disrupt that massive multi-trillion-dollar healthcare market is significant. It's ripe for tech innovation and better customer experience.
And finally, Project Kuiper, the satellite internet venture.
Very early stage, yes. Deployment started April and June 2025, aiming for service late 2025.
These nascent projects, like Kuiper, they're easy for investors to overlook, aren't they?
Absolutely. They represent huge long-term bets. Their value isn't fully priced in yet because they're still costing a lot upfront.
And recent launches, like the smarter Alexa Plus bundled with Prime.
Shows that continuous innovation drive.
So if you had to distill it, what's the secret sauce here, the uniqueness of Amazon's model?
It thrives at that intersection.
Yeah.
Customer obsession, tech innovation, and operational scale. The secret sauce is how the ecosystem integrates everything, e-commerce, cloud, logistics, to create these self-reinforcing synergies.
The AWS profits funding retail expansion, for example.
Exactly. Or retail data improving AI across the board. That interconnectedness, fueled by constant innovation and long-term investment, that's the core economic engine. And it's incredibly hard to replicate.
And their history shows this amazing ability to transform, to pivot into totally new areas.
It does. Started as a bookstore in 94, IPO 97, Prime launched 2005, AWS introduced 2006, revolutionized cloud.
AWS turned profitable in 2015, becoming the cash cow.
Right. Acquired Whole Foods in 2018, entering physical retail. Jassy took over from Bezos in 2021. And now, Kuiper launching satellites in 2025.
It shows this consistent ability to reinvent and succeed in completely new industries.
Time and time again.
And underpinning all this is a massive operational backbone.
Truly staggering. Based in Seattle, but operating globally. Over 300 fulfillment centers, expanding AWS data centers, offices everywhere.
They own some assets, lease others.
They own key facilities like data centers for control and security. But they lease many fulfillment centers for flexibility and scalability. Smart mix.
And increasingly using their own logistics network for delivery.
Yes. Reducing reliance on third parties like UPS or FedEx. Give them more control over cost, speed, and the customer experience. It's vertical integration in action.
Let's talk more about that vertical integration. How does controlling so much, from manufacturing devices to delivery, benefit them?
It's a profound strategic advantage. It lets them reduce costs, enhance speed, control quality in ways competitors can't.
Like enabling same-day delivery.
Precisely. That's a logistical marvel built on this integration. Compare it to Walmart relying on stores. Amazon's tech-driven network gives them an edge in speed and last-mile control. It costs a fortune to build, But once built, it's almost impossible to copy.
How do they actually reach the customer? What's the distribution model?
Primarily direct-to-consumer online. That's the main channel. But it's supplemented by physical stores, Whole Foods, Amazon Go, and crucially, Fulfillment by Amazon, FBA, lists millions of third-party sellers use their network.
That's a hybrid approach.
Yes. Allows for massive scalability and deep customer engagement across many touchpoints.
And does this diverse portfolio lead to predictable revenue? How stable are their earnings?
The mix helps a lot. It balances variable streams, like e-commerce sales fluctuating, with predictable recurring revenue.
Prime subscriptions, and especially AWS contracts.
Exactly. AWS is the bedrock here. Its subscription-based, high-margin model provides consistent, predictable revenue. It contributes the bulk of Amazon's profit, acting as that stable engine.
Generating almost $30 billion in Q1 2025 alone.
$29.3 billion. Demonstrates its role as that reliable cash flow generator funding everything else.
Okay, let's shift to competitive advantages, or moats. Amazon seems to have layers of them, building this fortress.
They really do. First, you have to talk about monopolistic traits. 40% U.S. e-commerce share, 31% global cloud share via AWS. That scale creates massive barriers to entry.
They can negotiate better, attract talent, outspend rivals.
Which leads right into economies of scale. Their huge volume reduces costs everywhere: logistics, procurement, infrastructure.
Which lets them offer lower prices, right? Cited as lowest priced U.S. online retailer for years.
Exactly. That cost advantage fuels higher profits or lower prices, reinforcing their position.
They also have powerful network effects.
Classic example. More sellers attract more buyers because of selection. More buyers attract more sellers because of the audience. It's a virtuous cycle.
With over 2 million third-party sellers, that's huge.
Immense stickiness and insulation. Every new user adds value for everyone else.
What about counter-positioning? How does that work?
Amazon Prime is the perfect example. The bundle, free shipping, streaming, music, books is incredibly hard for others to copy profitably.
Traditional retailers can't easily offer free shipping at that scale without losing money.
Because they don't have a high-margin AWS subsidizing it. With 200 million Prime members, that bundle creates immense loyalty and makes it hard for any single competitor to match the value.
And speaking of loyalty, switching costs are high, especially for AWS.
Very high. Once a business moves its infrastructure to AWS, databases, apps, workflows migrating away is complex, time-consuming, and expensive.
Creates that lock-in effect.
Yes, evidenced by long-term enterprise contracts, it ensures a stable, recurring revenue base that's hard to disrupt.
And then there's the power of their branding.
Meticulously built. Trusted globally for convenience, selection, reliability, that creates strong customer loyalty. When people think online shopping, they think Amazon. That top-of-mind recall is invaluable.
They also possess certain cornered resources. What does that mean?
Unique, proprietary assets. Their vast customer data from billions of interactions is invaluable for everything from recommendations to AI development. Also, their proprietary tech, like robotics and algorithms.
And strategic partnerships, like the Anthropic stake.
Exactly. Valued at nearly $14 billion. These are assets others simply can't replicate or acquire easily.
Their process power is also a key advantage, even if less visible.
Highly efficient logistics. AI-driven operations, world-class stuff. Sophisticated warehouse robotics, predictive shipping, allows them to execute at a speed and scale few can touch.
Same-day delivery is proof of that.
It absolutely is, a testament to decades of optimizing processes.
And fundamentally, proprietary technology is at the core.
No question. Advanced AI, the Alexa ecosystem learning constantly, the robust AWS infrastructure always evolving. They're not just using tech, they're inventing it. Recognized leaders in cloud and AI.
They also benefited hugely from timing, didn't they?
Being an early mover in e-commerce and again in cloud computing, it gave them massive leads before competitors fully woke up. They built scale, infrastructure, gathered data, created an almost insurmountable head start.
And their speed of execution remains remarkable.
Unparalleled ability to launch quickly and scale fast, transforming ideas into global operations in years. Project Kuiper, going from concept to satellite launches starting in 2025, is breathtaking speed for something that complex. It's just part of the culture.
How sustainable are all these moats? Do they erode?
They're continuously reinforced by Amazon's scale and their relentless innovation. They keep investing heavily in tech and infrastructure. It's a perpetual cycle of reinvestment that keeps the moats wide and deep.
But even this fortress isn't totally impregnable. What are the real vulnerabilities investors should watch?
Definitely challenges exist. Persistent regulatory scrutiny is a big one. Those ongoing antitrust lawsuits in the US and Europe could potentially force structural changes, impact how they operate.
Then competition isn't standing still.
Not at all. Fierce competition from tech giants like Microsoft and Google and cloud, and retail giants like Walmart and Target investing heavily in e-commerce and logistics. These are serious threats.
So how does a company this huge keep growing? Let's look at their growth strategy, starting with market penetration.
That's deepening their e-commerce presence where they already operate, especially in emerging markets with room to grow. Getting more purchases from existing customers, expanding categories, capturing more wallet share.
Market development.
Taking existing services into new geographical regions, like AWS, expanding into new countries. Finding new territories for proven products.
Product development seems constant at Amazon.
Always. Launching innovative, often AI-driven products like Alexa plus Theory, and big new ventures like Project Kuiper, creating entirely new categories, not just tweaking old ones.
And then there's broad diversification.
Entering totally new sectors. We've seen it with healthcare, advertising growing massively, even space ventures. It broadens revenue, reduces reliance on any single market, opens new growth frontiers.
The potential here, the total addressable market, TM, is just staggering.
It really is. E-commerce is a $5 trillion global market. Cloud computing, $2 trillion. Advertising, $600 billion. And Kuiper could tap into the $1 trillion global broadband market.
They're positioned in all these massive growing markets.
Often with a leading position. And acquisitions like One Medical boost their prospects in other huge markets like healthcare.
This reach gives them widespread impact across so many areas.
Their services touch everything. Individual retail, enterprise IT, entertainment, logistics, healthcare. This breadth ensures scalability and relevance across diverse industries. They're deeply embedded in modern life.
And they derive strength from diversity in suppliers and customers, too.
Yes, complex global sourcing reduces reliance on single suppliers or regions. And their customer base individuals, small businesses, huge corporations, governments, enhances revenue stability. Less vulnerable to downturns in one sector.
How does this translate into longevity? Are they built to last?
Highly likely. Their services align with fundamental ongoing trends in digitalization, e-commerce, cloud, AI. That's not reversing. The diversified model buffers against shocks.
So sustained demand seems probable.
I'd say there's a 90% probability of sustained demand. Underpins their long-term viability.
What are the key drivers pushing this forward and the main risks investors need to track?
Drivers. Relentless innovation, global expansion, and deep AI integration everywhere. Risks, persistent regulatory pressure, especially antitrust, intense competition, and broader economic slowdowns impacting spending. Powerful tailwinds and potential headwinds.
Let's look at the recent numbers. Q1 2025 financials showed ongoing strength. Revenue hit $155.7 billion, up 9% year over year.
That growth mainly came from North America retail and that high-margin advertising business. Even at their scale, 9% growth is significant expansion.
And profitability looks strong, too.
Operating margin was impressive, 11.8%, yielding $18.4 billion in operating income. Net profit margin at 11% for $17.1 billion net income.
And earnings per share, EPS.
$1.59. Crucially, that beat estimates by nearly 18%. Strong indicators of improving operational efficiency.
How about liquidity and debt?
Current ratio around 1.005 back in Q3 2024. Healthy liquidity. Enough short-term assets to cover liabilities. Debt to equity was about 52%. TTM, moderate leverage, pretty typical given their huge capital investments. Free cash flow, likely positive based on trends, showing they generate cash after reinvesting.
Digging into specific segments, how did AWS perform in Q1?
Revenue hit $29.3 billion, up 17% year over year. Strong growth, definitely, but it was slightly below some of the more bullish market expectations, causing some discussion.
But advertising continues to shine.
Absolutely. $13.92 billion, up 19% year over year. That's a really strong growth area, leveraging their data and platform effectively.
How does Amazon stack up financially against peers?
Revenue growth is outpacing traditional retailers like Walmart, around 5–6%. But in cloud, AWS's 17% growth is a bit behind Microsoft Azure's recent 20% plus figures. Margins are competitive overall, but vary hugely by segment. AWS is much higher margin than retail.
So the overall trend is improving efficiency.
Improving margins in EPS suggests that yes, more disciplined spending, even with that slight AWS growth moderation.
Okay, let's talk valuation. Crucial for individual investors. As of early July 2025, the stock was around $223.45. What about the margin of safety?
That's key. Buying significantly below intrinsic value to cushion risk. Amazon's forward PE ratio of around 35.9 is quite high. It suggests a premium valuation.
Meaning the market is already pricing in a lot of future success.
Exactly. To justify this price, you need strong conviction in sustained high growth and expanding profits for years to come.
So why does valuation matter so much even for a great company like Amazon?
It guides your decision. Is the stock overvalued, fairly valued, or a bargain? Amazon's prospects might justify a higher multiple than slower companies, but the risks, competition, regulation, execution mean you still need caution. Overpaying cuts your potential return and increases risk.
How do we even value a beast like Amazon? It's so complex.
Several approaches. Intrinsic valuation using discounted cash flow, DCF, tries to forecast future cash flows and discount them back. But forecasting accurately across e-commerce, cloud, ads, healthcare, Kuiper, for years, it's incredibly difficult, leads to a wide range of values.
So we often lean on relative valuation.
Yes, comparing metrics to peers of the market. That forward PE of 35.9 is well above the S&P 500's 2025 range. The PEG ratio, PE divided by growth rate, is around 2.4, assuming maybe 15% growth. The PEG over 1 can suggest the market's very optimistic about growth.
Is there another method particularly suited to Amazon?
Some of the parts, SOTP valuation, is very relevant. You value each distinct business segment, e-commerce, AWS, advertising, Prime Video, etc., separately, then add them up. Makes sense because they have such different growth rates and margins.
It's vital for investors to weigh both sides. Let's hear the bull case for Amazon now.
It's compelling and has strong institutional backing. Analysts like JP Morgan have targets of $240 or more. They point to AWS growth, the huge AI investments driving future efficiencies and revenue.
What about retail sentiment, like on X?
Often very optimistic. Predictions of $300 plus R, fueled by excitement around Prime Day. Robotics advances. The core bull argument is the diversified model, AI leadership, untapped potential like Kuiper ensure long-term growth and justify the premium. They believe Amazon's scale and execution win out.
But there's a solid bear case, too. What are the main points there?
Institutional concerns focus on regulatory pressure. Those antitrust suits are a big overhang. Could they force changes? Also, that slight AWS deceleration worries some given its profit contribution.
And bearish retail sentiment.
Some predict drops, maybe to $169, citing macro worries, tariffs, or just that the valuation is too stretched already. The core bear argument. Regulatory risks and intense competition could cap growth, making the high PE unjustified. They argue the good news is already priced in, maybe excessively.
So weighing both, what's the most probable outlook?
Given their execution history, market positions, and tech investments, the bull thesis probably holds more weight. It seems more likely they'll continue to find ways to grow. However,
risks are real.
Absolutely. Those regulatory threats temper extreme optimism. Competition is fierce. Growth might remain strong, but maybe not always meet the sky-high expectations baked into the price. The market is watching closely.
So at around $223, is it a discount?
Comparing it to analyst consensus targets, around $243, $245 suggests maybe 9–10% upside. That points more towards fairly valued to deeply discounted.
A lot of that future growth seems priced in already.
Largely, yes. Investors buying today are paying a premium for that expected future potential, not finding a hidden gem. Significant outperformance might need unexpected positive catalysts.
For those tracking Amazon, what are the key dates and developments coming up? Prime Day 2025.
July 8th to 11th. Always a big sales driver. Showcases their logistics power, drives Prime signups.
And a change in their streaming lineup.
Freevee shutting down in August 2025. Consolidating content under Prime Video, streamlining the offering, making Prime Video more compelling.
And Project Kuiper is moving ahead quickly.
Reaching milestones. Satellite launches happened April and June 2025, aiming for service late 2025. Huge step from R&D to deployment. Investors should watch updates closely.
Regulatory scrutiny isn't going away either.
No. The FTC antitrust case is delayed past 2025, but it remains a potential source of uncertainty. Crucial to monitor Q2 earnings on July 31st and any regulatory news globally.
How is the public conversation shaping up? What's the sentiment on platforms like X recently, say early July 2025?
Definitely mixed, reflecting the complexity. Bullish posts, like from @TheFirstDanny or at RockyTSTH, predict rises to $225 or $300, citing Prime Day buzz and technicals. They focus on innovation and dominance.
But bearish views exist too.
Yes, Accounts like its Stony Ray Vest suggest potential drops, maybe to $169, linking it to tariff concerns or just valuation anxieties, feeling it's overextended.
And some are neutral.
Like at Miss Brilliant, recommending holding, waiting for clearer signals on valuation or regulation.
So overall, the narrative is
Cautiously optimistic seems fair. Excitement about near-term catalysts like Prime Day and strengths in AI logistics, but tempered significantly by valuation concerns and those looming regulatory risks. It's a balanced perspective, weighing potential against headwinds.
which leads to the ultimate question for the next decade. Will Amazon be the biggest winner among all companies in emerging tech?
They are very strongly positioned to be among the top winners. Calling them the biggest is tough because competition is so fierce. But look at their strategic investments.
Across the board.
Right, AI, AWS services, Alexa, plus, well, that big Anthropic investment, autonomous vehicles, Zoox, drones, Prime Air for delivery, humanoid robotics, warehouse automation. They're in all the key areas.
And Project Kuiper's potential, could it be another AWS-level disruption?
Its potential to transform global connectivity is immense. Democratizing internet access like AWS democratized computing, it could happen. Tapping that huge trillion-dollar broadband market, it positions Amazon as fundamental infrastructure provider, not just a retailer.
So what gives them the edge?
Their immense scale, vast data resources, and rapid execution speed. Plus, their ability to integrate these technologies across their entire sprawling ecosystem that creates unique synergies others can't easily match.
But the competition is powerful. Google in AI, Tesla in AVs and robotics, SpaceX with Starlink.
Absolutely. These are formidable rivals. Still, assessing the odds, I'd put a high probability, maybe 70%, on Amazon being a top-tier beneficiary in emerging tech.
Oh, I still comment.
Because of that integration ability.
Yeah.
You don't just invent tech in a lab. They apply AI, robotics, connectivity across their entire business. Fabric, logistics, customer service, retail, cloud, creating value everywhere.
Are there aspects of Amazon's future that maybe aren't fully appreciated by the market yet? Nascent products, unique insights, what we might call asymmetric information.
Definitely. Project Kuiper is a prime example. The $10 billion investment is known, but its full potential value years down the line likely isn't reflected in today's stock price. It's still early, costly, no revenue yet. But success could mean billions in new high-margin revenue by 2035.
What else?
Their healthcare ventures, Amazon Pharmacy, and One Medical. Still early days, but the potential to disrupt that $4 trillion market is enormous. It's ripe for tech-driven improvement and better customer focus.
And maybe something more speculative?
AWS's quantum computing efforts. Highly speculative now, very R&D focused. But if they achieve breakthroughs, the returns could be astronomical, fundamentally changing computing. These long-shot bets aren't really valued in the stock today.
So, boiling it down, what's the core asymmetric insight for investors, and what are the absolute key risks to keep monitoring?
The core insight might be the depth of their AI integration. It's not just flashy consumer stuff. AI is deeply optimizing back-end operations across all segments: AWS efficiency, warehouse logistics, retail personalization. These cross-segment gains aren't always obvious but drive future margins.
And their logistics keep getting smarter, too.
Relentless logistics innovation, advanced rural delivery, cutting-edge robotics. These investments continuously reduce costs and could boost future margins in ways that are subtly powerful but perhaps underestimated.
And the crucial risks to watch diligently.
Keep a very close eye on antitrust actions. Adverse rulings could force structural changes, limiting growth or forcing divestitures. Also, monitor for any sustained AWS slowdowns beyond just short-term hiccups that directly impacts profits and investment capacity.
And broader uncertainties.
Always consider unforeseen technological disruptions from new players or major geopolitical shifts that could impact supply chains, market access, and their whole global strategy unpredictably.
So as we wrap up this exploration of Amazon, maybe consider this. Is Amazon just building a future where you get anything you want incredibly fast? Or is it also building the very infrastructure, the cloud, the AI, the connectivity from space that powers that future for literally everyone?
It's a profound question about their ultimate ambition and impact.
Your journey as an informed investor means looking far beyond just the headlines, understanding these intricate, connected layers of a company like Amazon. Keep exploring, keep questioning, and keep seeking out those critical, hidden insights that truly separate the informed from the crowd.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.